Hey guys, just started a live stream. Gonna take a look at the Bitcoin USD price action the last few days. My last video, I believe, was 6 days ago. So lots happened since then, and I want to take a look at some of the action that's taken place. So first, you want to take a look at the coin market cap here. Sorry guys, I had a technological issue here. I'm back. So I want to take a look at the coin market cap website first, see what's going on. So looks like a lot of green here in terms of USD, which is a good sign overall. Coin market cap sitting at right above $450 billion, so 463 billion. We're recovering from the lows that we had earlier during the year, which is a good sign. All right, so let's move into the charts. So first, I wanted to talk about the 2017 bull channel, 2017/2018, I should add. So we were following this nice bull channel throughout 2017, starting from January 5th at around 1136 high. And we've been developing these highs and lows throughout the year. And it was actually a very healthy uptrend, and everyone was happy about the profits we're making, obviously. And what happened here was we had this big run up here, which many people like to call a parabolic trend that we entered. So as soon as we exited this, we entered like a parabolic trend here. And yeah, everything was great. We were gaining thousands per week and people were making a lot of money. But obviously, just as fast as things go up, it will crash. So this was based on, people believe this was based on the CBOE and CME futures launching. So we did crash, and many people, as well as myself, were wondering where the low would be. So we did find a low around the 6,000 mark, and we did leave the channel temporarily, which was a big sign of concern, but we rebounded right away. I don't have the volume up here, but we did rebound with a serious amount of volume. So that was a very good sign. So now if we look at this trend, I mean, if we can just follow this trend, it's still a crazy uptrend, right? Like a lot of people are complaining about this edge-to-edge 70% crash, but I mean, if we just remain in this channel, it's still a really healthy uptrend. So what do we want to look for in this channel? We want to see it hit a peak around the top of the channel and then rebound up and down and then continue this sort of healthy channel that we had. Because if we see another one of these ones, yeah, it's great. We're going to go upwards of, 50,000, but we're going to crash just as bad. And the more crashes we have, the more people we lose in the community. So we want to keep it healthy, strong, obviously trend, but healthy, right? So this is what I wanted to say. And then also you can see the cup and handle pattern forming here from outside. This is a zoomed out version. I'm going to zoom in to just show the details of that. But if this forms, we're going to see a top hopefully around this area between the 15 and 16K area. So next chart. So I wanted to talk about the whole fib retracement of the entire move. So from peak to peak. So from this is Bitfinex, by the way, guys, just so you know. So I'm showing the 12-hour chart. I kind of like how it looks. You guys can do it on the daily, 4-hour, it doesn't matter. So this peak that we saw at 19,800, we crashed, and then if you fib out this whole move from 19.7 to 6,000, this is what comes out. And if we look at it, we rallied all the way up to the 0.382 level. And then obviously another thing to note is the strong volumes at the low to recover the price. Second thing to note is that the price got denied at the 0.382 level right here. And then we did have a pause and like a correction here, but the correction actually coincided with the 0.236 level, which is also nice. And if you did fib out this move, you were able to buy the lows, and you can see there are a bunch of doji candles at the bottom showing a pretty decent amount of support here. And then now we're back at the 0.382 level, and things are starting to look bullish because not only is there the cup and handle forming, here, but there's also the head and shoulders pattern forming that a lot of people are looking at. I don't need to tell you guys, if you're watching this, you already probably know what I'm talking about. So just gonna give a brief overview, like, you know, cup and handle or head and shoulder, whichever way you draw it, the targets are the same thing, right? It's the base, so it's this whole thing. So depends on where you put the neckline. Is it here? Is it here? You know, but regardless, even if we didn't draw the cup and handle, if we do break this, we're looking at an intermediate target of 12,800, and then beyond that, 14 and 16,000, and these do coincide fairly well with the traditional support and resistance levels that we have here. So what I want to talk about next is if we move this fib, so we fib it out from the bottom to the intermediate swing high that we had here. This is what it looks like. Let me get rid of some of these levels so it doesn't clutter the chart. So if we just look at it like this in a very simple way, you can see that the cup and handle target is very similar to this top, which is also resistance here. So if let's do like you guys obviously know what a cup and handle is. So if we do the measured move, I'm gonna do it from the body just because this wick I feel like is not super valid. So we'll do it from the wick at 6,500 to the neckline, which I believe is here at 11,300. That's a 4,900 or $5,000 move. So let's say we break the neckline here. So we're looking at 5,000 move up right around here. So we're looking at around 16,500, which coincides with this resistance zone here. So if you guys were taking on the long trade, obviously the safest way to do it is if you're really confident, you can position yourselves now. But if you want to do the safe trade, you would want to look for a break of this with some sort of serious volume, then take profit anywhere in this area, and then obviously the stop loss is a swing low here. So that's a pretty good risk to reward ratio on a trade. I'm just going to put a rectangle here just so we kind of get the idea. So it's a pretty big range, but I mean, the profit you can make from this is quite a bit. And I know most of you guys are using leverage, so this is a fairly decent trade here. All right. Let me get rid of this. So this is the down channel that we've been forming in the 2017/2018 crash. And I like this down channel specifically because we've had many points tested on the bottom. On the top, there's only been 2 points. This is also the downward trend line that many people have drawn, and if it's broken, would signify some sort of break of the downtrend. And right now, we're still in the downtrend. So until we break the downtrend, there's not much that I can say here. Until we break the downtrend, according to this, it is bearish. So this is the same key form of resistance here. Same thing with cup and handle. It's all coinciding and looking like the same thing. We'll move on to the next chart. So this is a zoomed in look at the cup and handle, and the cup and handle is it's looking good, right? And it doesn't matter how you draw it. It could be a cup and handle, head and shoulder, whatever you want to call it. But the targets remain the same. The targets are around 16.8 here. So I'm thinking between 16 to 17,000 is a fair price to take profit and then reevaluate the situation. And obviously, we're not going to just shoot straight up there. It's not going to be a green candle that just goes straight up. Sorry, there's notifications here. But these are the trades that you want to take on. And then the stop loss is below the swing low, 92.37. All right. And then, yeah, this is also matching the fib target that I did in the previous chart as well. So I wanted to do some Ichimoku Cloud analysis. I know a lot of people are familiar with this indicator, but to those that aren't, it's going to be a little bit confusing, but hopefully you can do some research on your own and figure out how to analyze this indicator. But basically, I wanted to note a few things. So the 1 day still shows a lot of resistance points. And right now, there are reasons to be optimistic, but there's reasons to be still cautious as well, right? So if you look at this, so reasons to be optimistic, right? So I'm going to get rid of some of these things just so you can see better. So the 50-day moving average was a key resistance here. As you can see, there's a shooting star candle that denied it right at the 50-hour moving average and this trend line and this resistance line here. But right now, we closed the daily above the I believe we closed it above. Yeah, we closed the daily above the 50-day moving average, which is a good sign. But the one thing to be concerned about here is that the current candle is being rejected by the 125-hour moving average. And you're going to ask me, where did you get this number from? Is this a random number that you came up with? And no, it's not random. So I backtested the 125-hour moving average, and this was a major support line for most of 2017. So whenever we crashed, the 125-day moving average seemed to be support. So there was one here, 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 and then here, but this one obviously broke down. But we did have a dead cat bounce from this moving average. So that's the one I'm looking at. And right now the 125-day moving average is resistance. And beyond that, so signs to be bullish is let me put these up. So the signs to be bullish is obviously that the price is above the 50-day moving average, and then also we're above the 10 EMA. So these are two signs to be bullish. And then what to watch out for in the coming days is to watch out for the Kijun. So if we get denied again by the Kijun, this is going to be, in my opinion, a very bearish signal. So we got denied here with a very strong reversal candle. It's called Shooting Star or Dragonfly Doji, whatever you want to call it. But I think this time around we're going to break through this. And then the targets, like I mentioned, are anywhere from 16 to 17,000. We're going to have pauses in between, but that's the ultimate target. So I want to take a little bit more of a zoomed in look here, because most of the analysis has been on the daily charts. So if we look here on the 4-hour chart, things are looking fairly bullish. We had a break of the cloud here, break of the cloud retest, and then we're right above the cloud. So there's a TK cross above the cloud, price is above the cloud, the lagging span is above price, and the cloud is green. So these are the four metrics you need to be bullish in the Ichimoku cloud indicator. And the last time we had a TK cross, although it wasn't as strong as this one, this resulted in a peak-to-peak move of 43% upwards. So this TK cross is actually stronger than this one, although this one does seem stronger because it gained 43%. This one is considered a stronger rebound because the price, the TK cross happened above the cloud and the price above the cloud in a green cloud. This was a red cloud and the TK cross happened below the cloud. So this is very bullish and, in my opinion, very strong signs, but these are resistance points that we need to clear first. And then we're going to zoom into the hourly finally to finish it off. So the hourly is the same story as the 4-hour. You would have got the signal a little bit earlier, I believe. But the hourly, we have the same thing, right? We have a TK cross above the cloud, price is above the cloud, lagging span is above the cloud, and the cloud itself is green. So obviously the price has been very volatile on the hourly chart, so we've had a lot of TK crosses back and forth. But this is, we keep having TK crosses above the cloud when it's green. So that's a good sign, and I think this is the one that we're going to finally stay above. And then how do you get back into the market if you miss this, right? So there's two ways, obviously. So you can buy the cup and handle breakout, or you can buy the dip to the Kijun, and then your stop loss, if we dip to the Kijun, would be anywhere below the cloud if the hourly closes. Okay, so hopefully this was some good information for you guys, and gonna catch you guys again soon. I'm gonna have a website coming up, which will be some sort of TA lessons, as well as some strategies that I like to use to trade in this market. But for now, I'll catch you guys in the next episode, and good luck trading. Please leave a comment if you have any questions or any suggestions regarding how I could improve the video. Thanks.